Hello, everybody. My name is Natalie Nixon. I am the president of Figure Eight Thinking. I'm a creativity strategist, and that means that I help and advise leaders and organizations on how to apply creativity and foresight in order to transform their businesses. So I'm here today with Mark Pinsky. Hi, Mark.
Hi, how are you?
I'm awesome, and I just want to share your really awesome background, a brief bio. So Mark is the author of Organized Money, How Progressives Can Leverage the Financial System to Work for Them, Not Against Them. From 1989 through 2016, he filled multiple leadership positions in the community development finance industry, or CDFI, as it grew from $1 billion to more than $120 billion. In that time, he led creation of innovative financial instruments, public policies, org models, branding and marketing campaigns, equity strategies, and self-regulatory models. And my interest in having a conversation with Mark is, of course, I'm really curious about the ways that you, Mark, see creativity showing up in your work. And just to remind everyone, I'd like to define creativity as our ability to toggle between wonder and rigor to solve problems and produce novel value, just to kind of level state it there. But I'd love to hear you start just by sharing what is a CDFI and what's the role of CDFIs in our country and our economy?
Thanks, Natalie. It's really fun to be talking with you, and thanks for doing this, because I think it's really important to talk about creativity, particularly at a time like this, when everyone sort of feels like they're on their heels, when in fact, this is the time when creativity is most valuable. So CDFIs, or Community Development Financial Institutions, are private sector financial institutions that are working, I like to think of them as working just outside the margins of where conventional institutions can work, with the dual role of helping the conventional marketplace and government understand how important these markets are, but also helping those folks living outside the margins, living outside the margins for a whole host of reasons, most of them not good, gain access to the mainstream, because together they're much stronger. And so, today, CDFIs are sort of at what I think of as sort of the financial front lines of what's going on in this country, in trying to make sure that we're helping entrepreneurs, particularly entrepreneurs of color, particularly women entrepreneurs who tend to get excluded from financial access disproportionately, gain access so that they can keep going.
Awesome. So my Cliff Notes version of what you just said is that the critical role of CDFIs is really to provide financial access for groups of people who traditionally may have be left out of mainstream ways to access capital and build equities. That's
way better than what I said. Yeah, that's good.
Okay.
That's good. And one thing I want to say when I think about this, and I thought about the topic of creativity, is that CDFIs shouldn't exist. And if you talk to conventional financial institutions and you can talk to economists who think about how markets are supposed to work, I like to say that CDFIs sound great in practice, but they'll never work in theory. And that they don't quite fit into things. And so everything about them has to be creative. Everything about them has to be innovative in policy and how they do financing and everything.
So say more about that. Where are you seeing creativity playing a really big role in the function of CDFIs? And especially now we are in the midst of the COVID-19 pandemic.
Right. Well, CDFIs tend to be close to the ground, close to the markets where they're working. And so they understand what the dynamics are. And generally, the folks that we work with in the CDFI industry are not conventional in any way. And so in a program like the big PPP, if people know it, Paycheck Protection Program that the SBA put together at the direction of Congress, has $760 billion of financing. That's not something that most of the businesses that we work with have experience knowing how to do. And so being really creative in, first of all, just convincing folks who feel like, for good reason, feel like it's never going to work for them, that they can try, and then being really creative in helping them understand how to fit into the SBA box, because it is an SBA box and it's a big program. They have to do a lot of loans. but helping them think a little bit differently about their own businesses often is a part of that, and see themselves as an ongoing business and not just something that people are doing as a necessity in the short term. So
I like that, because what I hear you saying is that there's a bit of paradigm shifting that you're helping the people who you're targeting to really try to take advantage of CDFIs. What's an example of a shift in mindset that you're encouraging people to take?
well, let me, if I can, and I'll try and do this briefly, let me tell you about what happened in the last crisis, the Great Recession, versus what happened this time, and what I think there was a paradigm shift that we couldn't even see until this crisis came along, which is the last time in 2008 when the financial system went sideways. People just assumed CDFIs would sort of fall apart and break apart, and they didn't. They did really well because they are close to people in the communities where they're working, and they do understand what's going on there. But somewhere in the midway through that, or late part of that, to 2010 or so, in creative ways and not, the mainstream financial system, the Federal Reserve System, the banking system, corporations started turning to CDFIs because they realized CDFIs were succeeding when they couldn't.
Interesting.
But the paradigm shift is, so that took 2 years last time. This time, as soon as it was clear there was a crisis, as soon as the financial institutions, as soon as government, as soon as state governments, as soon as corporations understood that this was, just how bad this could be, they immediately turned to CDFIs. And so companies like Google put a couple $100 million into CDFIs right away, like before most people. I'm sorry.
I had no idea.
Yeah, and the financial system, has committed over $1 billion. I mean, over $1 trillion. Let me get my numbers right here. Over $1 billion to CDFIs right from the get-go, as soon as they could. They recognized, instead of waiting and seeing where their CDFIs could help, they put them on the front line, because that's what CDFIs do. And so the paradigm shift is CDFIs went from being this afterthought to being first responders in the financial crisis and on the financial front.
That's a really cool metaphor and way to think about a financial institution.
Yeah.
Would you share a story about a creativity leap that an institution or a colleague in financial services sectors, maybe even more specifically in the CDFI sector, has made recently?
Sure. I'm gonna use an example that's sort of close to the CDFI world. The book, thank you for mentioning the book, Organized Money. I co-wrote that with a good friend of mine named Keith Mestrick, who runs Amalgamated Bank in New York. And Amalgamated Bank is a $5 billion bank, which is a small bank in this world. It's a lot of money. It's a small bank, and it's an unusual bank. It was labor owned. It was started by a labor union. It's labor owned and controlled. It always has been. It does, it does only green financing. It doesn't do any fossil fuel financing. It won't lend for fossil fuel financing. And it does a lot of innovative things. And one of the things Keith understood, and this is part of where the book idea came from, was that at the scale of $5 billion, it was important, but it wasn't significant enough to really make the difference that needed to happen in terms of how banking and finance work. And so he decided to take his bank public, requiring that it keep a majority of labor ownership. So it would always be, the labor would always have control over it, and building into it a bunch of social goals that the public markets don't like, right? I mean, they're not interested in it. They're only interested in the financial stuff. And so it was something that everybody said you couldn't do. You'd never get anybody to buy it. They did. You'd never be able to get anybody to accept the model. They did. You'd never be able to come up with a governance structure that worked. They did. And it remains to be seen what difference that makes, but it's part of this broader movement of what we call benefit corporations that are trying to combine outstanding financial performance and public purpose impact, having a good impact on the world. And it's an incredibly creative area. So
yeah, I love that example, because your colleague really leapt into embracing a huge what if question.
Yes.
And he has essentialized, with the help of B Corps, becoming a bit more commonplace. He normalized what people thought, as you said, just doesn't happen in the public finance space.
Yeah, there was no roadmap out there. No one had ever really done this. Other people had tried similar things. No one had done this, especially in the banking industry. And it was it was curious and innovative, but it was really significant because it opened the door to a whole bunch of other folks who we hope will follow his lead and take companies public and get investment from investors who care about what they're doing. So
that's wonderful. That's awesome.
Yeah.
I've been advising a lot of organizations and my clients on what I'm calling the value of the pause during this time of COVID-19. There's a lot of slowdown and also a lot of scurrying that I think a lot of us are feeling in the midst of having to reorient ourselves to a different way of working. And I have been advising a lot of people and organizations to focus on what I call the 3 R's during this time. The 3 R's are: we need to restore, which is to kind of assess our present state. We have to reorient, which is to do a bit of scenario planning and some big blue sky audacious thinking, even though that might feel counterintuitive during times of urgency. And thirdly, we have to reboot. And my advice has always been to choose one of those new insights they've gathered and start to implement them slowly. Would you like to speak to any one of those 3 R's, either the need right now to restore, or to reorient, or to reboot?
Yeah, I mean, I think the motto of that is kind of don't just do something, stand there, right? And take a little bit of time to just take stock of what's happening. We're in completely uncharted territory, completely, for virtually everybody. No one knows how government works. No one knows how private, how markets work, And so, the tendency, the habit is to want to do what you did the last time or times before that. That's the habit. There's one of my favorite, probably my favorite quote of all time comes from Faulkner, who wrote in Light in August, he wrote that memory believes before knowing remembers. And we do things out of habit. We do things because we know them from the past, rather than because when we pause, as you suggest, and we take in what's going on around us, we see things differently, we do reorient, and we know to do something different. We still tend to fall back on the habits, but we need to do that, especially now. There's never been, in my life, I don't think there's ever been a more sort of powerful moment for doing exactly what you said.
It's an opportunity to create new habits, right, for ourselves individually and for our organizations.
And for the world at large. I mean, I've had conversations. I've been approached by several Fortune 100 companies saying, "Boy, all this talk we've been doing about how the kind of the capitalism that we're living in doesn't work because of the book." People are coming to us and saying, that doesn't work. We really need to think differently about capitalism, and you're doing that. Can you help us? And that's usually a couple calls, and then the phone goes dead, right? Because those are people who paused. They're trying to reorient, but they get distracted doing whatever they're doing, and they're going to reboot the same way they did before. That's what happened to the financial sector. The preface of our book is all about the very moment when the financial sector and policymakers could have reoriented and rebooted in a whole different way that would have made an enormous change in our world, and blanched, didn't do it, right? Backed off.
I'm always interested in thought leaders like yourself to understand how you might be reorienting yourself. So do you have an example, or can you share a story about a creativity leap that you yourself have made? Because I often find that in order to advise people, we need to be practicing a little bit of what we're recommending. So is there a creativity leap that you found yourself making this past month?
I'll give you 2. It's only been a month. It seems like it's been 6 months. What are you talking about?
I know.
Yeah, that's right. I'll give you 2. One is in my work, which is right as COVID came into sight and started affecting how we live and what we do. I had just launched a new business in January of this year with a partner, and the business was taking off much faster than we anticipated. So we were going to have to reboot because we're going to have to run to catch up to the potential. And, and it involves travel and being places and meeting with people. And so that literally got put on hold. And, we had a lot of business lined up, and, so, okay, that happens. You can't do anything about that. And so we've had to reinvent that business, and we had to really think about what's essential that we do the way we did before, and what can we do differently? What has Zoom taught us about how we do meetings? I mean, the fact that no one loves Zoom. It's not that anybody, maybe the Zoom people do, but nobody else does. but how do we use the fact that people are more accustomed to it to our advantage in a business? But that's not the only thing. It also meant that there were things we had in our business plan that we wanted to do in years 4 and year 5 that we're now going to try and do in month 4 and month 5.
Wow.
Because they involve technology that makes it possible to do more, better, faster, and cheaper, right? And that's my old motto. But you know, it just as the fundamental challenge we have in this business called CDFI Friendly America. And the fundamental challenge is how do you connect these CDFIs? We talked about the value they have working in underserved communities outside the margins. And there are 19,000 communities in this country that are underserved that have never seen or heard of a CDFI, right? So it seems like we should try and match them up. And I think CDFIs are going to be even better, more valuable to those communities than ever, but we can't use our old model. It's too slow. We've got to accelerate that model and make it easier and faster and go from being, frankly, sort of a boutique business to being a you know, mass market business in some ways.
And you may not have ever stumbled upon a way to accelerate the offering had it not been for this pause because of COVID-19.
Yeah, even more than that, I think probably we would have done what most people do with the things that are in years 4 and 5 of their business plan, which is never quite push yourself to get around to doing them, right? And so this forced us to say, are we serious about this or not? And it may not work, you know, I don't know, we'll see. But you know, you've got to do, and this is what, you know, this is what we see. I'll tell you, I want to give you a second example, but I want to tell you a story about a CDFI, something that happened in the early 90s when there was a real estate recession in New England, and there was a CDFI in New Hampshire that, you know, was worried about whether it would survive. What they saw was all the mainstream financial institutions, they were doing housing work, and they saw the mainstream financial institutions go, you know, becoming insolvent because their renters, if they were in, you know, multifamily, or their homeowners weren't keeping up. And what they discovered in the underserved markets that they were serving was that these are people who know how to be creative. These are people who had to be creative to survive every day of their life, whatever it is, right? And so if they had to work 2 jobs or 3 jobs, they would. If they had to figure out some creative way of managing them, they would. They didn't have a lot of money, but they'd find a way. And you know, CDFIs are built on that premise that you do what you have to, and you find a way, and you know, you have to be creative. I don't think CDFIs think of themselves as very creative. I don't think people think of finance as very creative, but it is. But
I love that example. That's absolutely correct. Yes.
Yeah. So here's the second example, which is of how I've been creative, partly because I had time and partly because I needed to do it in order to restore, reorient, and reboot. I started writing a novel that I've wanted to write for 30 years.
Wow, that's impressive.
Yeah, I don't know if I'll get very far, but just the practice of going into a world that's in my mind and in my history and in my, you know, the world, the things I see around me, and trying to make a narrative out of it has just, you know, it's rewired my brain already. And so it's a great process to go through, even if nothing ever comes of it.
Before I ask you my last question, can you share a little bit about how you are trying to structure your writing process?
Well, not enough. It's the short answer. You know, having just written a book, or having published a book last fall, I wrote it a couple years ago, but that was really a matter of, it's what I should be doing, which I just had to block out a certain number of hours in the day and make myself sit there and write, because it's the only way, really. You know, you've written a book, you just have to do it, and sometimes it means you produce a lot and none of it's any good, and sometimes you produce a lot and a little bit of it's good. And I thought, well, if we're going to have downtime here, and you know, this business I started is slowing down, and I don't know what else, I just thought I would sort of I'd find an hour here and an hour there. It's not working, so I'm trying to get back around to giving myself at least a 2-hour block.
I love that. That's really, that takes a lot of courage to try to, as you say, rewire your brain. Well, I really appreciate, Mark, the way you've basically broken down that CDFIs are a means to provide access. They actually have a very creative foundation because they really tap into people who already have to be resourceful, and they themselves are resourceful. And from my perspective, resourcefulness is one of the principal elements of creativity. I'm going to end by asking you to share who is for you a wonder mentor, and who is for you a rigor mentor. This person could be someone dead or alive, someone you know or is aspirationally want to know, but who comes to mind for you?
Well, I'm actually going to name 2 people, and they're not separate. They're both wonder and rigor, both of them. And they were the people who brought me into the CDFI industry 30 years ago. Hard to say that. And when I came into this world, I thought that they were either lunatics or geniuses, and I didn't know which. And they were both a little bit of both, in truth, right? Because they had this vision of this world that became the CDFI industry that no one bought in, no one in the mainstream accepted, but they were absolutely sure of. And part of that was predicated on a notion of rigor that didn't exist then in either mission rigor that didn't exist in the mainstream financial institution or financial rigor that didn't exist in the nonprofit public purpose world, right? And the product of that was, this is in some ways the biggest innovation I imagine I'll ever have a hand in, which is together with some others, we work to create, and their names are Martin Paul Trimble and Jeremy Nowak, and Jeremy passed away a couple of years ago.
Oh, yes.
Great loss.
Absolutely.
Yeah. And what happened was we had this opportunity when Bill Clinton got elected to create something in the federal government to help this nascent CDFI industry that no one had ever heard of, including Bill Clinton. And they were brilliant in creativity, and not only in figuring out how to get this in front of the Clinton administration, which they did, we did with enormous success, but also for imagining a way for government to work that no one thought about. And to this day, the CDFI fund that's created in the Department of Treasury is unlike any other federal program that has ever existed. And
Wow.
it's different. And if more programs did that and adopted that model, we get a lot more out of government than we do now. So it was a brilliant innovation, just imagining that thing that could be, and in fact needed to be, in order to do it. But the second part of that is this whole industry until then was rooted in faith-based investors, or largely rooted in faith-based investors, and particularly orders of women religious, particularly Catholic sisters or nuns. And they were investing money from a community pool. They were living in poverty, and they were investing their money because they had this vision that they could create this industry that could do their work for them even after they were gone. That's the real story. And there's two things that happen when you're borrowing money from nuns, right, or women religious. One is you do something really important with it, you be really creative with it, and you find something to do that no one else was thinking of, because they're not taking the risk with you to do normal things. But the second is you don't ever lose the nuns' retirement money, right?
Mm-hmm.
And you do whatever you have to. And so that combination of creativity and how you do your work and the discipline of financial rigor that stands up to the scrutiny of federal government, stands up to the scrutiny of the big banks and the little banks and anybody who looks, and has now for 35 years, that to me is, that's the epitome of what you can do with creativity and discipline and rigor.
I love those examples of wonder and rigor, and a real testament. I mean, 35 years, that's a real testament to the legacy that you've contributed to. So Mark
I'm lucky to be part of
Pinsky,
it. Thank you.
thank you so much for being here. Once again, Mark Pinsky is the co-author of Organized Money, How Progressives Can Leverage the Financial System to Work for Them, Not Against Them. And he's also the co-founder of CDFI Friendly America. Thanks so much, Mark.
Thank you, Natalie. It's wonderful talking to you.